Hello, hello. Welcome to another 10K Let's Play analysis. My name is Sage Seeds Cap, and my goal is to make everyone a financial sage by walking through annual reports together. Let's dive in so that your wisdom can blossom. I don't know anything about Veeva Systems. I don't even know what they do. I just think their name sounds like the cheese, like the little orange, the Velveeta. But yeah, and let's jump into it together so that your wisdom can blossom. We're going to go straight to the item 8. I don't want to look at anything else. This is what I'm most comfortable with. Then let's go to the income statement. Where is the income statement? Immediately, the income statement. All right, let's just go onto the balance sheet then, I guess. I don't know why a company would not have an income statement. Let's just move on. Lots of short-term investments, significant upgrade in their level of short-term investments. I remember this is the 2 years ago. This is the most current year. Deferred costs is up there. Property and equipment a little bit down. Intangible assets down a noticeable amount, and deferred income taxes shot up very largely. Not the same as their short-term investments, though. That's really the big story. And so liability side, we have a little bit more deferred revenue, which is basically people not paying them. And accrued compensation and benefits. So that's things that they owe to people. Their total liabilities is a third of their current assets. There should be fine, like in terms of their financial position. This is quite defensive. Like they'd have to really, really be burning a lot of money in order to be worried. I just remembered I didn't see their income statement because I don't know where they put it. Juicy amount of retained earnings, I guess. I mean, although they have this much in just short-term investments. So again, does that mean anything? I don't know. Comprehensive income. Ooh, so their income statement is just the comprehensive income statement. I don't know why they would do that. Like the only takeaway I can get from this is that, but although I've never seen this before, is that maybe their entire income statement was not allowed to be shown. I don't think that's the correct thing. Either a weird filing thing happened here, or Veeva Systems has some super niche legal reason for not having an income statement. I'm just gonna ignore that for now. But good news is that we now can see a lot more of what their business actually is, right? So they have subscription services and professional services. Revenue is growing very healthily. The cost of subscription services, cost of professional. I mean, I hate this language. I'm sorry to say that so strong, but this is red flag. Just put it all as cost of sales, or be more like, don't depend so much on this subscription services, professional services to be like such a huge part of understanding your revenue and gross margin. I might as well I don't know anything about your gross margin, basically. I don't know what they mean by subscription services and professional services, right? They're a research and development first company, but nothing dramatic. Overall, we're looking at a net income margin of that'd be like higher than 20. That's fine. That's good. That's a good net income margin. Usually this whole thing right here, these two rows, this is what I was trying to say earlier, is usually this is everything that would be on the comprehensive income, and everything else would be called the statement of income. For some reason, they didn't put a statement of income and just put everything into comprehensive income. Ooh, okay, there we go. So they're a very big stock-based compensation company. Yes, professional services. That's a bit wild. It's actually a very significant proportion of professional services. Going to the cash flow. Yeah, lots and lots of stock-based compensation. It's growing very rapidly as well. They've almost doubled their stock-based compensation since 2021, whereas their depreciation has not budged at all. And so depreciation usually is a really good indicator leveling up your company. And then if this is going up, you would expect that in a sort of way, you're continuously leveling up your company. It is a pink flag. Or there's no such thing as a pink flag. It's a red flag. It's a red flag that while depreciation, so they're not leveling up at all, their stock-based compensation is basically shooting in a very aggressive way upwards. Just call that another red flag. Let's look at this cash flow management. Deferred revenue is killing them. Jeez Louise. Deferred revenue is a liability. You wouldn't want it to be increasing, I guess is what I would say. But people just don't pay them for whatever it is that they do. The good thing is that they're receiving that money at a slower pace, but it's still good. Maybe it's in bulk here. Maybe I don't know. I don't know. Their vendor thing is not super beneficial to them, though. The way they manage their payments. Overall, the aggregate term here is not The worst, they're not deferred income taxes. They would not have been making a lot of cash this year. It's not great, honestly. Red flag the whole thing. Let's look at the description of the business. A cloud for the life sciences industry. That's another random cloud business. And I know that's like one of the hot things right now. As a financial analyst, I'm not going to win if I start to try to look at every business and then think, oh, let me figure out the super niche details that they're really professional and experts in and try to compete with them on that. No. I need to find the overlap of what it is about all businesses, which is the finance, and then focus just on the financial and economic implications of what they have. Interestingly, here is a cloud business does hook people in and then keep recurring subscription costs, right? And so it's kind of like a bit of a gateway business. These gateway businesses scale very well because they're essentially collecting taxes on activity on their platforms. And so if you're a life science company and you find it worthwhile to be hooked into a cloud ecosystem, which is something that maybe a lot of people know if they have a friend with an Apple device or something, right? Once they're hooked into that ecosystem, your friend with the Apple device stops caring how much of a additional markup they have to pay just to upgrade their phone to the latest device, right? They're getting this recurring revenue in order to stay engaged in the ecosystem. It's like a tax. These life science companies that engage with Veeva Systems are going to have to get sucked into paying a tax to stay in an ecosystem that helps them be so efficient, right? I'm sure Amazon and Google and Microsoft and just endless companies are doing cloud businesses, including those big names. But why would you stick with any of those when we can be a specialized offering just for life sciences? That's all we need. We just need life science clients. How do they recognize revenue? Yeah, professional services, that was their thing. That's the new thing that they included. Actually, you know what? No, it's for a second I thought they were doing something different here. Maybe they think they're doing something different here. But professional services is anything in order to keep people engaged with the service. They'll call it training, and all these other things. It's the same category as setting up. Like if you had to have your cable explained by the cable man, this is such an out of date reference. Oh my gosh, who has cable, right? Probably 40% of people have cable. I think I was reading that earlier. Let me talk about stickiness for a second. That is it. That is what makes a cloud service a cloud service. If your ecosystem is not sticky, quote unquote, in terms of making people want to stay connected into it, then you're not charging the fees for very long, right? You might be like a toll road that a lot of people will try out when you first open. But if you're not actually a better toll route, there are many cities, certainly in the United States, there are many cities that had those big, fancy, expensive toll roads that just lost money because they weren't actually a better route than the free or competing versions. This is you saying that in order to keep people hooked in, you need to be training them. If you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe. Oh, you know what they're doing here? They are saying that training and managed services boost to their gross margin. And so thinking of it this way is that for the same amount of or a comparable amount of effort, this cloud business competing with other cloud businesses, they're able to, on average, charge everything that their competitors can charge, plus additional consulting fees, plus additional training fees, plus different managed services fees. Now, let's go back to the income statement just to remind myself. How big is this revenue? This is not a great margin business, making 70 million. Is this what that would be? Yeah, 70 million in while collecting over 400 million is fine, I guess. It's not the worst. Let's go back. I'd be curious to find out more about their professional services, and revenues are recognized over time based on time incurred and contractually agreed upon rates. So the only way they can get customers to hire them for training and consulting is by charging per hour fees. These customers basically want to keep them on the clock whenever they're being trained. Now, don't forget that stock-based compensation was growing very, very quickly, and for this in particular. The cost of third-party subcontractors, travel costs, and allocated overhead. Oof. The picture is starting to form here, and let me tell you what it is. Imagine you're a life sciences company that is going to not just use the Amazon, the Googles, and the Microsofts of the world. You find a specialty cloud service that is going to help you with a long list of niche to your business requirements, things like regulatory and compliance um, requirements, things like managing your trial phases as opposed to your development phases, as opposed to other needs. Other cloud services might give you the computer, which means that you could build anything you want. But the if you want is really what you're focused on, right? Here with Veeva Systems, you have the ability, the benefit of being able to already have these solutions packaged in with the cloud service. There's not a lot of standards in these industries, right? Every life sciences company feels like they have a unique process, and so they're not well served by these kind of aggregated, anyone can come in self-service type products, right? And so even though you're a more niche version of this for the market that needs it, being a niche service provider often comes with the detriment of you have to create a niche product. How niche is too niche? This is very much the question that Veeva Systems is probably handling very, very often. The other side of this is what the employees of Veeva Systems whole role in this. Let's remember stakeholder theory. Businesses are so much more than just the investors. They're also the employees, and that takes many, many shapes and forms. For the cost of professional services and other revenues, it's taking the form of stock-based compensation expense. It means that these employees are taking a larger piece of the pie in this industry, and that's not good or bad. I'm going to tell you a secret here is that it doesn't really matter. Your politics don't really matter very much with this. What matters is if everyone is in agreement. And if the clients see the training as a huge benefit, then it is economically sound, quote unquote. I'm going to use the word sound here because it'll be congruent with how their employees are engaging with the business, right? So you motivate your employees to be providing these professional services because your customers find that to be what they're most interested in. They're going for customers that have niche needs. They need to focus on professional services because that is their competitive advantage. Let's look into the stock-based compensation specifically in order to see what professional services exactly are being delivered to customers. I have a sneaking suspicion that that's going to be on there. The only really important part of here, let me show you what it is. It is most of these options were granted in connection with our annual performance review cycle. Once you've read that, you can understand that this is essentially saying not much at all. We did add a note for revenues by product. They don't see it as very much the responsibility of the employees, although the stock-based compensation would say differently. But they are willing to say professional services is broken into commercial solutions and R&D solutions. Not useful names, guys. Again, let's keep digging. Let's try to leave the item 8 and see if in another section they might talk more about it, in particular the item 1, the business section. I want to look at this section. Their description of their professional services to maximize the value of our solutions. Now, again, this sounds like justifying that we should continue to be used is what you should actually read, or what I actually read when I see that. One way to read this is our customers don't know how to use cloud solutions and they don't know what they're doing until we show up. I'm still not sure if they should be proud of this or not. Either they are having trouble connecting their product to their customers, or they're doing a whole product plus training thing that customers actually do highly value. Now, here, once again, of course, they believe that the customer is highly valuable. After adopting our product, you find out that your business employees are actually not using the product. You can hire us to make sure that people use the product. If your technical people in your company can't figure out how to use our product, pay us again and we'll tell you how to use the product. We'll tell you why to use the product and how to use the product. We'll tell you the steps of how to upload data to the project. Then general, just additional training, pay us another fee and we'll do it for you. Now, this is fascinating because it's both exactly what I was a little bit worried about, but it's actually leaning so far into what I was worried about that I'm a little bit kind of changing my mind. Here in real time, I'm changing my mind, and I'm going to tell you why. I'm changing my mind because They know what they're doing here. This cannot be an accident. They're at this stage where they're actually turning some of their business into doing this. Now, let's not forget that we have the numbers to accompany this. And numbers are so important because we know that this is a relatively new part of their business because of the income statement. We know this. We saw it literally be created and grow in the income statement just recently. We know that this is not likely to be the very first plan. They're figuring this out as they go along. But what are they figuring out? Well, they're figuring out that if they can charge people for every single ancillary thing, a lot of the life sciences and maybe even chemical industry participants, they are technical experts. But that doesn't mean they need to know how to use computers, certainly like cloud servers. That's a different type of technical altogether. Do they want to learn a completely second foreign type of nerddom? Probably not. They're probably willing to say, here's a cloud service that's niche enough to be chosen over a larger cloud service, and they offer the added benefit of letting me stick to my core nerd competency. More importantly means is I don't need to start talking to IT people that are part of my own business. Right? I'm a life sciences company that can just hire doctors and doesn't have to worry about hiring data people. That's pretty interesting. A bit scary for IT departments all over the world. For decades now, it's been like is an integral part of a business. How would you have a business function without IT is what a lot of people think. Well, here's Veeva Systems saying this is how, by paying little fees for every single IT related task. But with the added benefit is that the IT people you're paying are experts with the cloud platform. Life science nerds can continue to operate like they did before cloud without having to worry about any of this other stuff. If I had gone with my gut with the red flags earlier, this is something I'm learning. For a long time, I was very quick to throw away annual reports with red flags. As part of making these videos, and I'm sticking through with company and annual reports longer than definitely longer than I would normally. The second approach is making me realize that I'm able to change my mind by digging in a little deeper here. Professional services business is profitable. It's not something to get too excited about, but it is in theory accretive to the subscription service, right? Because the only people that can get these professional services are people paying subscriptions. And something I didn't pay too much attention to before is that they have a very healthy margin on the subscription services, probably an above average margin on the subscription services. And so I would like it if they change this accounting to reflect that the cost of this professional services is tied into keeping subscription services revenue nice and high. Instead, I would start amortizing some of the specific, even something like setting up versus ongoing training versus IT consulting or slash consulting services. That would be a more illustrative example of these costs. These aren't accurate margins. We're gonna definitely keep an eye on Veeva Systems here. I've liked this company. Not all the companies are always going to be something that we liked, and they'll always keep a stream of new companies because there just are a lot of new companies all the time. Thank you for learning about this. Yet another cloud services company, but this one focusing on a niche target audience, which is letting them kind of maybe discover something innovative here. It was a lot of fun to not trust necessarily our first gut reaction and then persist until we really had a story. They've choosing to do accounting that's a bit less normal. That's where maybe it was a bit confusing at first. But at the same time, we don't want to miss a potentially really good business just because they aren't using the same accounting as everyone else is. Maybe they're right. Maybe it's time for new accounting for their industry. Please take a moment to like and subscribe. Click the little bell thingy in order to see when there's going to be more videos posted. I'm definitely going to continue to try to keep niche companies like this relegated to Friday releases. And then on Tuesdays will be more hopefully commonly known, more high profile businesses. Thanks for spending this time with me, and please don't forget to share your wisdom. If you want me to invest, please be more upfront about what it is you do. But